Trust matters. Accurate data that's relevant creates trust. And when you have that trust with your clients, you are going to build relationship faster and move towards closing transactions faster. Join me with David Childers, the president of Keeping Current Matters, as he walks through some relevant data for today's market that will help you be the trusted advisor and close more transactions and ultimately be a better advisor. Can't wait for you to listen to this episode. Good morning, everyone, and welcome to the Loan Officer Mastermind. We are so excited to have you here. I'm Todd Bookspan, the founder of Win by Noon, and I'm joined by none other than my co-founder of this Friday Mastermind that we've now been doing for 10 years, Mr. Dave Savage from Trust Engine. What's up, Dave?
Just finished up. Well, it hasn't finished. It's finishing midday today, the Mastermind event, Mastermind Summit here, and it's been awesome. Got some takeaways to share, but super excited to have Mr. David Childers joining us today.
It's all beyond both of you. Yeah.
Todd, you want me to do
Yeah, why don't you go ahead and do the
I
intro?
want somebody to do the official intro. That's all I want to make sure.
Yeah, I'm gonna, Dave, you've known David longer than me, so I'll let you do the official intro so we make sure we do it justice.
Yeah. So I've had David as a podcast guest. I can't even count the number of times. Known him for multiple decades. By the way, had dinner with Jimmy Mack on Tuesday with Cindy Ertman. But this guy, when it comes to data-driven news, is truly one of the top authorities in housing. Last year, I don't remember exactly how many times he shared the stage with Tom Ferry, but he is regular on all Tom's events because Tom believes keeping current matters, and the data, behind that is one of the most important things for real estate agents, whether it's buy side or whether it's listing side. So a whole lot of agents tune in to Keeping Current Matters. David is the president, but David, I saw in the news that there was a transaction with Housing Wire.
Right. Yeah. We're now part of the Housing Wire.
Tell us what's up with that.
Yeah. So thanks for having me on. First of all, it's great to be on with you and Todd, and grateful for what you do. And I want to say something about that. I'm actually today in Lexington, Kentucky. I just spoke yesterday with Tom in Nashville, but Tom believes, just like the two of you, that the educated professional wins, and the educated professional is the best thing for the consumer, right? Keeping Current Matters joined the Housing Wire family. That was a big moment for us. I think as really the last 20 years, KCM has been the authority for agents to be able to explain what's happening in the market to the clients they serve. And for the future of Keeping Current Matters, the partnership and the acquisition of Keeping Current Matters by Housing Wire just makes things even stronger. It's telling our team, we have been using for several years Housing Wire data. We regularly quote Logan and Altos and all the tools that they have, and so it was almost like hand in glove, a match that was already in process. But we are extremely grateful for it to be part of that team. I mean, I can't say enough about Clayton and what he's built and their whole team over there. They do a phenomenal job. So we're excited about it. It's going to mean new things for KCM in a very good way, in the things that we now have access to, the things that we can bring agents and loan officers as far as perspective on the market. So that's going to be a lot of fun.
Well, I'm, as an advocate for the industry and advocate for housing, someone who wants to help future-proof both loan officers and local realtors. I think it's amazing that you guys have become part of Housing Wire, and you've got the resources of a large media platform and the distribution of a large media platform and data-driven stories that are like positive and constructive, I think is the future of lending. And so it's great to have you guys together and just bigger opportunity for the industry.
Yeah, we agree. It's going to be great.
Yeah. So Todd, how do you want to, kick this off with David? Any questions you want to open with or topics?
Well, I mean, I love that you just said that it's the educated loan officer, the educated real estate agent that's going to win. I know that, really the goal today was for you to come in and share what you do so well, which is a market update. So how do you want to kick that off? How do you want to bring us up to speed? Here we are almost halfway through 2026, and where are we at? Help all of us be smarter when we have our next
I think
the client or a partner.
Yeah, the truth about those things. So let's kind of back up and say this. Let me just state the known is this year hasn't turned out in the real estate and mortgage business like maybe we thought it would, in the beginning of the year. And that's okay. It's okay. If you remember the old book that was written, both of you probably remember this. Max Dupree wrote a book called The Art of Leadership, which the first
Absolutely.
line of The Art of Leadership is the leader's job is to define reality, right? And reality defined for everybody in the mortgage business, everybody in the real estate, all of us title, everybody that serves the transaction of buying and selling a home is this year has not, we're at the midpoint of the year. It's not turned out like we thought it would. Most of the forecasts have been downgraded from what we'll see this year. So I'll give you just a couple of examples. And I know we have people listening and watching today, but well, I'll link all of this, Todd, give it to you. We'll link it in the show notes where you have the sources, because I'm certainly passionate about that. Existing home sales, when we started off this year, we thought they would grow by about 15%, 15%. That's been downgraded to about 4%. Let's call it kind of a flat year over year. And that's due to primarily the rise in mortgage rates, right? We're kind of starting off the year, hey, we're doing pretty good. Then the Iran conflict comes in, and hopefully we have peace and an agreement settled there, and we get through that. We all want that, of course. But most of the forecasts for the year have been downgraded. New home sales growth was about 5%. It's been downgraded to being flat. Prices flat year over year. Mortgage rates, the forecast is they're up slightly, right? It was the average rate that we started the year with that was forecast was 6%. Now it's 6.5% that we will average out in this year. Fewer job gains. The consensus was this year about 800,000 new jobs in this country this year. About 400,000 is what the consensus is there. So I say all that to say, as we go through this, how do we then help people make a good decision? How do we help people determine is now the right time to buy a house? I think there's a lot of people that are on the sidelines going, is it a good time even to buy a home? Affordability still weighs heavy on consumers. I will make a prediction. I'm interested in both your opinion on this, but housing will be the central theme, if not the theme, of this coming election, because it's where people are frustrated. It's where people are scratching their heads going, are we even going to be able to afford a home? And that's sort of how politicians work, is they go, this is what you're concerned with. This is what's bothering you or affecting you. Vote for me. I'm going to solve it. Right. Now, that's not a political statement. That's both sides of the aisle will do that. But housing will be a central theme of this upcoming election.
Well, the only, I guess, nuance I would add to that is, it's a central theme right now. And
totally. Yeah, I agree.
And it's not just in politics. We've had A-list celebrity commercials around housing, where, and usually that's just not the case. And it's not just Rocket anymore. You're seeing a lot of large companies talking about how they're going to innovate for housing. It is the biggest source of wealth for 90% of America. And then one of the biggest takeaways I had at this event, and it was just such a central theme, whether it was what happened on stage or what happened off stage, is so much just understanding that the future of a local referral-based mortgage or real estate professional isn't about the transaction. It's about the financial well-being of the consumer and helping people build wealth with real estate over time. Yeah. And so amen to that. Anything you want to add to that, Todd?
Well, it just brings me back to when, Dave, you and I went to Washington, D.C. with First Home IQ, and we had almost 60 loan officers there, and we got to meet with members of Congress, their staff, senators, their staff, really talking about affordability. So, I think it's super interesting. I love, David, that you think it's going to be a pivotal part of the conversation for the next 2 years politically. But, ultimately in the end, the way that it becomes more affordable is either prices come down or rates come down. And, certainly we hope that it's the rates that come down, not prices. But that's why I'm really excited to see where you think it's going from here.
You couldn't have set me up better. I'll take that. If you were to go back to the midterm elections in November of this past year, every candidate had housing as a part of their platform. So it will be a significant theme this fall. And I think most people in this country want to see affordable housing, want to see more Americans be able to buy all the things that we want as an industry. And I'll cover that because I think the general consensus is what goes up must come down. So prices have got to come down somehow. I don't believe that's true, and I'll prove it to you in just a minute. But the biggest issue, and I wouldn't say it's really the issue, it's symptomatic of a few other things in housing. And you may have seen this. So it's fairly consistent or a lot on YouTube and news articles, or the number of people pulling their homes off the market and delisting. Have you seen that? That's higher than it has been since the pandemic. So remember, the pandemic rolls in and everybody's like, well, I don't want people in my house. Delistings are at their highest point. Again, I don't think that's the issue. I think it's symptomatic of what's happening in the industry. And so maybe if you guys like it, I'll hop in. I got a few slides on that. You know me, I always bring the slides
We
and
love
and the visuals. Yeah.
Real quick, two caveats. If you're watching this as a podcast on a YouTube channel, and the recording down below in the show notes, we'll have a link that will have access to these. And then anyone that's watching this live, put your questions in chat. Like we got the man on here and he's got a lot of slides. I want everybody to be thinking about this in the context of how could you take what you're learning right now and bring this into a one-on-one conversation with a realtor and a one-to-many conversation with realtors? How can you bring data-driven leadership to agents? So be thinking of this as prep for some of those meetings and some of those presentations.
Yeah. I think all of this is something you could go out and record a video on today. You could share, you could do whatever you wanted to. But I pulled this quote up here from Redfin. I mentioned that nationwide, 5.8% of all U.S. home listings were taken off the market. This is back in April. That's tied with December for the highest share since the pandemic. But again, I wouldn't say it's the actual issue. It's symptomatic of what people are feeling in housing right now. And if you look at the top 50 markets across the country, the share of homes that were delisted in that metro. So you see Atlanta leading the way with, gosh, whatever that is, 11%, almost going all the way to Pittsburgh, around 4%. So it's happening all over the US at a pretty quick rate. And in this, I want to kind of go through these. There are 5 reasons that I think give us a window into where are the education opportunities right now. This is just, what are people where's there a disconnect between what they think and what reality is? And the study gave 5 reasons that people are pulling their homes off the market. First, factually, and it's taking longer to sell a home today. Most people in our business are like, oh, I believe that, I know that. But what I will give you, and again, you're watching today, the slides, maybe a visual to show people just the reality, right? A lot of agents have got a seller right now that, 24 hours passed and they're like, are we even going to sell the house? We didn't sell it in the first day, so what's going on? Inventory in this country is rising faster than demand. That is true. And so people are pulling their home off the market. Sellers still have pandemic era price expectations. The house down the road sold for this. We should be able to sell ours for that. And maybe they're not. Economic uncertainty weighs heavy on buyers and sellers. And sometimes just in a transaction, delisting can be sort of this reset that maybe a property needs, and take it back out at a different time. So let's talk about days on market. 26th straight month of homes taking longer to sell on a year-over-year basis. The median home has spent 1 fewer days on the market than the pre-pandemic norm. So we're kind of back to those pandemic norms. We went through the pandemic, everything was fine off the shelf, and we're back to that on days on market. The other reality is inventory has been rising for 4 straight years. You see it right there. Kind of bottom out during the pandemic, more and more inventory. Every region of the country has more inventory, some more than others, some still starved. The bottom line is across the country, there are more homes on the market. So it's taking longer to sell. There are more on the market, and people go, well, are we even going to sell it? Right. So they pull their home off the market versus doing something else. This is interesting right here. Of the homes in this country in 2025 sold for less than the asking price. This is important for a couple of reasons. I think I have this slide right here. I don't have that slide. I can throw it in here. There was a study done where 80% of sellers think their home will sell for the list price or more. So the interesting thing is you have, what's the math on that? 38% that actually do, but 80% think that. So there's a disconnect there in what they think and what the reality is. So that's certainly weighing heavy on consumers. Look at this. Many of the areas, metros in this area or in this country, are becoming more buyer friendly. The graph on the left is the end of last year. 46% were kind of balanced or loosening, only 16% buyers markets. Fast forward to April of this year when this was done, almost 70% of the markets were buyers markets. There's been a shift in real estate in the last 6 months from this more seller leaning market to this more buyer leaning market. Now, why is that important? Well, sellers sort of are looking in the rearview mirror going, we want to get this, we want to sell it fast, we want to do that. And buyers are ready for a deal, right? So that is a disconnect. That is a mismatch in the market. But Todd, you said, most people want to say, hey, when's housing going to get more affordable? That's the right way to say it. What most people think is, when are prices going to come down? They also think, when are mortgage rates going to come down? Whenever somebody says, when are mortgage rates going to come down, what they're actually asking you is, when are they going to be around 2 or 3% again? Right? That we remember that from the pandemic. And we certainly can answer that and weigh in on that. But this is the best graphic. And I've used it before, Dave. You've seen this before, I believe.
I have.
It's a look at builds going all the way back to the 70s. And I love to use this when explaining this to someone who's wondering, when will prices go down? That, we built more homes back in the 70s and 80s than we did in the last decade, the last 15 years. Because of the financial crisis, builders got out of the business. We didn't build the homes we needed, blah, blah, blah. We know that. Oh, by the way, COVID comes in, mortgage rates fall, everybody jumps in, price shoots up. Economically, I think most people understand that. Now, why will we not see prices come down? The central reason for that right now is there are no forced sellers. No one's forced to sell in this market. Why is no one forced to sell? Well, if you look at the percent of mortgages by rate, 50% start with a 2 or 3. 27% start with a 4 or 5. So the number of people that have a preferred mortgage rate, let's say, it's unreal. They couldn't go out and buy, rent an apartment for what their mortgage payment was or is. So they don't have to sell. They're not going to sell. Oh, by the way, you've seen this one before. 40% of the homes in this country are owned free and clear. 27% have at least 50% equity. So most people are like, we're good. We're good. We don't have to sell. So I don't see a scenario in this country, and the two of you could weigh in on this, where prices come down. There are a couple of markets. I was in Nashville yesterday. I mentioned speaking for Tom, and somebody was talking about the Chattanooga market, a smaller market in Tennessee. And she said, well, prices are down in Chattanooga. And I said, how much are prices down? She said, well, they're down about 1%. They're down. Okay. How much did prices go up in Chattanooga in the last 5 years? My guess would be, I don't know that number off the top of my head, but somewhere around 50 to 60%. The U.S.
Yeah, average. I was going to say 50%. It's
in most markets.
I knew it was more than 1%.
Yeah. So let's pump the brakes on prices are down, right? So there are markets that are flatter or slightly down, but there is not a case to be made, in my opinion, for prices to fall across the country. Could some markets, Austin, Texas, and some outlying markets, see a little price reduction? Austin, Texas is probably the leading market for prices coming down. They're down about 7%, but they went up 75%.
It's more of a minor correction than it is a market.
So it's not this, back during in what people mentally sort of frame it in 2008, it's when nationally we lost 20% value in homes across the country. Nothing like that, certainly being around. Oh, this is the slide I was talking about. I got them out of order. 80% of sellers think they'll get their asking price or more. So big disconnect with sellers and what the reality of the market is. It's interesting. Buyers are most concerned with the economy right now. They're concerned with mortgage rates. They're concerned with inventory and prices. The economy is, I don't know that anybody's on the call that's like, I can change the economy or I can, do that. But we can give great advice on rates, on inventory, on prices, what we see happening, where things are heading. I think sellers, the disconnect is, I thought this was the case when it's not, it doesn't take as long to sell a home, or I'm going to get my price or whatever it is. This is what buyers are concerned with. And the good news is, I was at an event and an agent raised their hand and he said, David, I wish things would just get a little bit easier. I wish it wasn't so hard. And I said, I hear that. I think that's a common sentiment with many of us in the business, but you actually don't, because there's so many opportunities right now to be the educator, to be the one that steps in and solves the problem. These are the problems that buyers and sellers are facing. Okay, we can produce content, we can get our message out, we can do all those things to talk about what's happening. I'll go through this really quickly before I turn it back over to you. We can certainly have a discussion. I don't know if there are any questions. Is foreclosure activity is rising in this country? That is factually true. This is from Adam data. You see the first quarter. This is the fourth quarter of 2024 through the first quarter of this year. Slight rise in foreclosures. Again, I don't see this as an indicator of some massive foreclosure problem. If you look at the greater picture, going all the way back to 2005, we still are a very situation in foreclosures in this country. There's not this leading indicator to say, hey, a massive amount of people are going to be foreclosed on. We don't see it as a big issue, but I do think it'll be talked about out in the market, out there, and being educated on it, helping people understand it, I think is going to be key.
Love it. And I really love a question that came in from Kathy. I'm going to read it out loud, and I want to have all three of us kind of give an answer on this. I even think this would be a great LinkedIn post. So I'll write up a LinkedIn post, Kathy, with just a little playbook. But here's the question. If you were mentoring a brand new loan officer, or even an experienced loan officer who wanted to really understand the industry, instead of just quoting rates, so like an advisor, someone that understands the market, understands it, what topics should they master first? What resources do you consider essential for understanding mortgage rates, economy, and housing trends? David,
Yeah.
you want to go first on that?
Kathy, I think it's a great question. The good news about the world we live in is all the information that you want to obtain is readily available, right? There's so many people that produce information on housing and on the economy today. If anything, I would say it's a little overwhelming. Like, where do we start? And I see your question in there. Where should they start? I'm going to take a selfish route, because every month at Keeping Current Matters, we produce what we call the monthly market report. And it's kind of a rundown, like I did, of what's the most important thing happening in real estate right now, because you're bringing those things in. But we do it as Keeping Current Matters. Lance Lambert from Resi Club, I really love what Lance puts out. He does a phenomenal job of it. Housing Wire. I mean, just the Housing Wire information. But I would commit to, Kathy, I want to answer your question directly. I think if you're trying to learn something, you have to have dedicated time to learn it. Whether that's a time a week where I'm going to study, or a time each day where I'm going to go, okay, what do I see out there? I mean, even with Claude and all these AI tools, you could set up a system where it's bringing you, tell me what was published on inventory, on prices in the last week or in the last day, to make it very easy to do that. But topically, I think everybody should have an understanding in this country relative to real estate. Where is inventory heading? Because if you show me where inventory is at in your market, it's going to then predict price, right? If inventory is climbing, it's going to, plateau pricing. If you don't have enough inventory, price is still rising. Inventory is the determining factor right now across the U.S. And so I think that's something that I would look at.
Todd, how would you answer that question?
Well, of course, I love that David said the important thing is you actually carve out time for it, right? So, me as the win by noon productivity guy, I think that's the biggest challenge. And I think the end, you kind of nailed it, is that you have to pick your source, I think, to choose, because if you're trying to look at so many different sources, what I like to do is pick a source like Keeping Current Matters and say, okay, this is going to be, my thing that I become an expert in. I like the fact that you guys take a data-driven, educated approach, and you deliver the data consistently now for, years and years. And so I think that, it's kind of pick the source, make the time, and then stay consistent with it. And I think that's how you become an expert. I think it's, too much in is going to just make it super confusing for you. And
Sure.
so, I would follow what you guys do because you do such a good job of breaking it down.
Yeah, and I'll go pretty quick just because I'll net out all my thoughts in my LinkedIn article next week. But I first of all, when Dave said for selfish purposes, I mean, guys, keeping current matters. I mean, I don't have any financial interest in the company, but I would say that that is just a first place to start, And then at Mortgage Coach and the Mortgage Coach YouTube channel, we're bringing that type of financial education, and then we're also teaching how to actually use that information and go into the market. One thing, Kathy, the way I'm using AI and I'm recommending people to do it is if I was a loan officer, I use Claude. I would have a skill on being an expert around the market and advice and build a skill and put content into that skill. So you literally have a coach, financial advisor coach in your whatever large language model that you use. And I'll put a few more in my, article. All right, we got another question here. Where'd it go?
Is that the AI question? AI
Oh
is a
yeah,
hindrance.
is there a point in time where you see AI as a hindrance to the real estate mortgage experience? Will people get burned out on it, both consumers and the industry?
Gosh, I wouldn't put myself out there as an AI expert. Let me just go ahead and say that. I don't see a time where people will get burned out. And I think a couple of things are happening right now. I'll tell you a funny story. So I have three kids. My second one just graduated from college, and in his last month before graduating, he got busted using AI on a paper, in college. And so it's kind of funny in the world we're trying to teach everybody to use AIs. Universities are still trying to figure out how to navigate around it and typically how that, kind of goes. But as I was talking through this, what I realized is he had sort of used it in a sloppy way. And I think what's going to happen, what I see with AI right now, Dave just gave an example, like for the work that I do, the past we used to have to go look at 50 sources and it was very time consuming. Now there are tools that will sort of serve that up to you, so it helps us gather information and do that much more efficiently. Let's talk about the content business. People that just create content and have AI throw something out, yeah, I think that's going to get old real quick. I think people in this world are looking for authenticity. I think they're looking for people that can show somebody this is what's happening. And that's the area that I think you use, and then you apply your personality and your expertise and all of that with it. That's what I see. But Todd or Dave, you may have more information on that than I do.
No, I think you said it well. And it was actually a topic at the executive panel that I led here, and someone used the analogy of plastic surgery of like, hey, good plastic surgery, you don't know someone had plastic surgery.
Yeah.
Good use of AI, you don't know someone is using AI, and you have to assume that people are using AI. So I align with, I don't think people are going to get tired. I think people are tired of it now. Like when you see something, and I do think like there's some voice AI services where, okay, I know this is a voice, I know this is AI, but this is useful. This has
Mhm.
value to me. By the way, if I don't perceive it as having value to me and being a nuisance to me, it's going to hurt your brand. It's going to hurt your trust. And people are tired of it now. But I think a great use of AI is going to age very well. And people that aren't diving in and getting after it, I think are, just behind on a very important change happening in the world.
Yeah.
Todd,
Yeah.
your thoughts?
Yeah, I kind of agree. I mean, I think in the end, it's the whole idea of overwhelm, and I know that so many people are using AI as glorified, Google search, and I think you talked about it when you build a skill, right? So if you don't know what that is, look it up and figure out a way to clear the content, right? Dave, you use the word trust, right? You're going to break trust with your clients, and I think we're in the trust industry and we're in the education industry, but you have to figure out how to simplify it. I feel like we as loan originators have done a really good job of eloquently confusing our clients for years. And so if you can be the person who can bring that data, explain it in a simple way to build trust and then deliver on that promise, I think that's who's going to win in a world of AI or otherwise.
Yeah. Something I just want to add this in. I think AI can be used. One of the people that I like to follow on social is Donald Miller, who wrote Building a Story Brand. I'm a big fan of Donald Miller. But he posted something the other day, and it wasn't really a new concept, but he said, the quote was, become famous for solving a problem. And most of us in the business, this thought of, for lack of a better word, become famous by having more followers or doing something that's flashy or new or whatever. But the baseline of this is become famous and become useful by solving a problem. Here's what I do know. AI will help us solve problems a lot faster. That's true in the world today. Things that are being created with AI every day are changing the way that we do things. But if I say, hey, this is what my problem is, or this is what my consumers or customers are struggling with, how do I leverage a tool that helps me do that at a quicker pace? I think that's where AI will be used in our business.
Todd, I know you've got to jump soon, so why don't you give there's another answer around noise by Michael, but anything you want to say as closing thoughts and any answers to the questions in chat?
Yeah, I mean, I think it's becoming if you're going to be a better thought leader, it's really all comes down to prompting, right? I mean, you got to ask better questions of AI if you're going to get better answers, and then really go out there and talk to the experts in your market. I think that's, David, my takeaway today, my biggest takeaway was the 80% of buyers who expect to sell their house for full price versus 62% are giving discounts. So there's a huge disconnect there. And so if you can be the one who's bringing that data to the consumer and more importantly, the realtor, because they're the ones that are having the listing presentation and they lack the data that you provided. Because if the listing agent did a great job of articulating the data that you've presented here to us today, then you would have clients that are setting prices better, more accurately. And it seems to me if I've got an accurate price that looks good and is marketed well, that's probably going to sell better than my overpriced dream that I have. And so I would just encourage you all to think through what we've heard so far and how can you take this data back to your partners and your clients so that you can be more valuable going forward. And I like that Donald Miller head nod there, David, because I do think the whole story brand thing is something that you all need to be thinking about if social is a part of your game, which we know if Deborah was here, she would be telling us all about what Plug and Play is doing and how she's doing it, but that's an opportunity as well.
Yeah, no doubt. You be the guide. As we go into the final 20 minutes of this mastermind, reminder to anybody, keep the questions coming in chat. I'll make sure that we address those. So David, another real takeaway that I've had over the past couple of days, but I came into the year with the takeaway that first-time homebuyers matter more than ever. If you're in mortgage and you're in real estate, first of all, that is the segment of type of consumer that is going to want to keep the human in the loop the longest, regardless of what automation can do. First-time buyers, first-time sellers, super, super valuable to be experts at. And one of the things that First Home IQ just came out with was really just an educational financial literacy track that every home buyer should have access to. I would love to know, because we're really advocating to the industry to be that master, any data that you have, any slides that you have, any talk tracks that you think would help the mortgage professionals that are watching this, the mortgage professionals that are supporting realtors, where could they use data to create more clarity for first-time home buyers? And then, by the way, part two to that, if we have time for it, any data for first-time sellers that comes to mind. But anyways, first question.
Well, let's take the first-time home buyer, for example. And we do have that. I don't have it right now. It would take me too long to try to find it. But let's talk about what we know. First of all, we know the average age of a first-time home buyer has risen steadily through the last decade, right? To knocking on the door of 40 years old. And so some of that's culturally, some of that's all of those things, but there is a lot of that weighs on affordability. Now, we're all on this call in the business of helping people buy homes, the dream of home ownership. But I have 3 kids. Dave, you have 2. I will tell you that in their, kind of all in that similar age range of young 20s, kind of starting off their lives. The number one question that I believe most kids in that age range struggle with right now is, will I be able to buy a home? That is the number. That is the question. And that's why I'm saying, like, this is a reason folks are upset about it. This is a reason that, oh, the other thing is too, and I think everybody knows this, but I can grab this information too. The use of gift funds in a transaction is at an all-time high. So we know, I'm going to call them kids. We are struggling with this question. We know their parents and grandparents want to see them achieve the dream of home ownership. Why? Because it's been so good to them. Ownership has been a good thing personally, financially. So I think our job right now with first-time home buyers is to number one, understand, and it kind of goes back to the question that I think Kathy asked, do you understand what the issues are? More than just hypothetically, it's hard to buy a home. If I understand the issues, then I want to focus my effort on showing people how you buy a home. How do you go out and listen? Nobody better than the people on this call to say, hey, here are the tools. Here's the things that we have access to that help you buy a home, because you can absolutely buy a home. It may look a little bit differently. You may have to think creatively, all of those things. So understand the problem, and then the solution in today's world for the first-time home buyer, showing them how. Okay, so that's one. For the first-time seller, I don't think there's much more current information other than there is a massive disconnect between what they think and the amount of time it's going to take to sell your home, the price that you think you're going to sell your home for, and what that looks like in the transaction. What they call it in sort of the data world is a recency bias. And a recency bias is, I remember when you put your home on the market and it sold in 12 seconds, and we didn't have to do that. It's a situation where I think in a lot of cases, somebody that's a first-time home buyer or somebody who's a first-time home seller, they're never going to ask you. But you can then come up with content, you come up with articles, and build content that way to help answer those questions and show people, hey, where we're at right here in Nashville, Tennessee, the average days on market is 35 or whatever the number is. And it's taking longer to sell a home right now than it did for the last 10 years. Whatever the fact is, people go, oh, that's interesting, right? It's interesting. You'd have to weigh in on this, Dave. But on the real estate side, I was at a conference just a couple of weeks ago, and an agent came up to me and she said, when I sit down with someone, the first question I ask them is, I say, is someone taken 5 or 10 minutes to educate you on what's happening in this market? And she said 9 times out of 10, the answer to that question is no, right? Because when an agent sits down with a buyer or seller, they're trying to get an agreement signed or a listing, whatever it is, we don't take the time. And I think for us too, for loan officers, taking the time to say, hey, has somebody educated you on what's happening in this market right now?
I would love to get some best practices from you around how to be a loan officer or realtor and be the guide, and to share expert opinions. I mean, it's something you've become a master of. I mean, and some of that has to do with the repetitions, the amount of education you've been. But if we think of it almost like you're a coach to coaches session, where we've got an audience of people that, and I guarantee some are sharing data and slides and education in a way that is a whole lot less effective than others. What are some of the best practices, from your opinion, on how to be that educator and guide?
Yeah, I think it's a great question. And I appreciate you saying that. I'm not saying that I'm the best at it. First, I think you have to understand a couple of things. Most people don't share to the degree they could because they don't want to be wrong, right? You don't want to go out and say something where you have to go, well, I said that and I was wrong. The number of times that I've said something that it turned out the other way, I can't count anymore. That's the truth of it. And my intent is never to try to come and do something with you, Dave, and say, let me tell you what's going to happen. I have a crystal ball. Let me tell you what's going to happen in the world. I don't. What I'm trying to do is to say, hey, here's what I see, and here's what I think about that. Now, let me give you an example. And I learned this a long time ago, and I will say it just about every time I speak. And it's a question that if you have something to write down with, write this down. We can put it in the chat, whatever. The question is, do I have a relevant market opinion based upon fact. That's the question you have to ask yourself is, do I have a relevant market opinion based upon fact? Now, listen, in the mortgage business, in the real estate business, everybody has an opinion, right? Rates are going to go up, rates are going to go down. I wouldn't buy a home now. I wouldn't, whatever. Everybody has an opinion. Very, very rarely in the world is that based upon a fact. It's based upon what I think I read. It's based upon a video that I saw. It's based on what my Uncle Charlie said at Thanksgiving dinner. And he said he wouldn't buy a house right now, right? He still lives in your grandmother's basement, but we're letting him tell us what to do, right? But so do I have, so if I understand, most don't want to share because they don't want to be wrong. And then I want to have a relevant market opinion based upon the facts, then I can dispense wisdom. So let's take an example. And you wouldn't have to agree with me on any of this. But my question is, what's your opinion? But oh, by the way, use facts. Use facts. That's a novel concept, right? In the world, like let's base what we say on facts. I want to show you a slide that I built yesterday.
By the way, this formula that you're unpacking is awesome. One nuance I would add to it is David didn't use the word expert quotes, but you don't need to be the person who's saying
Totally
what you're going to do, but you
Mm-hmm.
can be the one to say, here are some experts that are saying it, and again, be the guide. And so I do think where he said facts, and I would go facts and expert opinions,
Mm-hmm.
and this is what I think. And then, by the way, what do you think? Or better yet, when you're talking to clients, sometimes ask them what they think before you share what you think.
That's the best question you can ever ask somebody is if they ask you a question, say this: tell me what you've heard. Tell me what
Yeah.
you've heard. Well, I heard they wouldn't buy a house right now, or they wouldn't. I heard mortgage rates are going to stay high forever, right? So let me just give you just I want to show you something, Dave. You'll have an opinion on this, I will guarantee you. I'm not saying I have a crystal ball or I know anything, but I want to point something out in the market. I created this with our team because I was like, you know what? I wonder about this, about the price of oil and its correlation to mortgage rates. So this is going back to February, the price of a barrel of oil. And I'm not suggesting that we all need to become experts on the price of oil and all of this. But if you kind of go with this graphic, that red bar is about the time that we entered the Iran conflict. Okay. So what happens then? The price of oil shoots up for a lot of different reasons. The second thing that happened has been happening for, call it the last month, is all right, we're going to have, peace in this situation. The Strait of Hormuz is going to be opened up. All of those things that have been said. And it's like, we're going to have it. No, we don't have it. We're going to have it. No, we don't have it. We're going to have it, and we've been in sort of the seesaw. But that's this time period, right? So one, I can tell you just looking at this, words matter. Words in our economy matter. Right? Words of the talk of peace start to drive the price of oil down. What do we know about oil? It's tremendously inflationary. Everybody goes, oh, I get that, right? Anything that you buy at the store has to be shipped on a truck that requires oil, gas, and that's the case, right? So inflation rises, right? We know inflation is the enemy of long-term rates. So it all makes sense to me. Now let me overlay 30-year fixed mortgage rate. Wow. And I can go, okay, I can see that. So what's my opinion based on that? Well, my opinion would be, you know what? Number one, I hope we have peace just because that's the person that I am and I want to see peace in the world, right? We know that the talk of peace, and let's hope that is all solved and there's an agreement, brings the price of oil down, which is less inflationary. So my money says, you know what? We'll see an improvement in rates based on that. I'm not saying tomorrow, I'm not making a prediction here. I'm just saying that is my relevant market opinion. Now listen to me where this comes in. I'm going to stop sharing for a second. If it were true that rates were going to come down over the next 6 months, what would every client say? You know what they'd say, Dave? They'd go, that sounds wonderful. We'll just wait. We'll wait. And my question back to them is, what do you think everybody else is going to do? What do you think everybody else is going to do in housing? that will spur housing on. So there's actually opportunity in the market. So I want to try to paint that picture using my relevant market opinion. But oftentimes in the world and media and everything, people are attracted to the people that have opinions. They may have a wacko opinion, but it's polarizing, right? We go, oh, I'm with that person. I'm not with that person. But in our business, if you're going to make an impact, you have to have an opinion.
Yeah. So opinions matter. I'm going to repeat back what I think the framework is. And something I'm not sure we mentioned when we started it. When you're going to present data and opinions, make sure it has context and value for the consumer. And they've acknowledged, and you've come to some mutual understanding that they're confused about blank. And so you've got a frame. And now we're solving for that. And we're looking for facts and expert opinions. And then we're presenting those. And then we're saying, either asking them for their opinion or we're giving our opinion. But that's where the magic is. And, if you're not, sharing an opinion, you're not being a leader, and if you're not helping someone have more clarity around their opinion, their position, if it is weight, that's our job. That's how we become super valuable to folks. So David, we are in the closing minutes. I want to make sure that anyone who wants to sign up for Keeping Current Matters knows how to do that.
Yeah, I'm going to drop a link in here real quick just so everybody has it. It's trykcm.com. You can go there, you can do a free trial and check it out. But my point is, you don't have to use KCM for all of this, but have a source of knowledge. And if I were to leave everybody with someone, is have a source of knowledge, dedicate a time each week that you're going to consume that knowledge, make your notes and say, hey, this is my fact-based opinion on this topic. And if you're living in that sort of world, in that state, if that's the right word, then you will step out as the expert. And it's okay if somebody says, hey, what do you think on this? You don't have it. You say, hey, let me get back to you on that. Let me do some research, because that's what they want from us. They want you to have an opinion. They want us to show up with that. So Dave, it's always fun to be on with you and Todd, and grateful for the invite. And thank you for that. And for just that, one of the things you said, we've known each other for decades now. One of the things that I love about our business is the relationships that I have, that you have in our relationship. So thank you for that.
Grateful for you, brother, and excited about continuing to bring data-driven leadership to the national markets and to local markets. If you got value from today's call, wherever you're watching this podcast, give it a like, share it with your friends. As a reminder, Win by Noon now syndicates this on all major podcasting platforms, including the YouTube channel. And David, I can't wait to be on Zoom with you again. Hopefully we share a stage in person this year.
Let's do it.
And guys, try KMP,
KCM.
KPM. It's in there, and we have a link down below. Take care, everybody.
Take care. Bye-bye.